G'day folks, welcome back to another quick update for natural gas. Now it remains bullish, but we've got a bearish divergence that's still in play. Now we're going to also include back testing in our videos from here on, and the target for that has been hit after this post-weekend spike in today's trade. Make sure you hit that like and subscribe button before we go any further. So I'll go through the trading strategy on the charts in a minute, but first in terms of the back testing for these, we look at the less than 1 day. For example, we're going to demonstrate on the 1 hour. We invest at 1 contract per trade. We average down limit of 15 contracts. When you start adding to those contracts, we take profit of 0.003% and we average down whenever the price retraces by at least 0.005%. So let's look at the natural gas commodity price on the long-term trends. We've got the monthly, the weekly and the daily. So whenever the price breaks above the moving averages and the CCI is above the moving averages as well, that's bullish momentum. And these moving averages are available in the description below if you want to learn how to draw those on your own charts. So on the weekly, it's been bullish now since end of September 2024 on the CCI, likewise on the price chart. So it's bullish movement on the weekly. And on the daily, if I zoom in on this, on our previous video, we hit this resistance up here at 4562. Now, since opening post-weekend, the price has spiked and broken up through that resistance. So at the moment, open skies. However, let's look at the micro charts to see if there's any retrace in play. At the moment on the daily, it looks pretty clean, nice bullish move. But if we go to the intraday chart, we've got the daily here as a reference. So here on the hourly, you can see that here we've got a bearish divergence, lower highs on the CCI versus higher highs on the price. And if we were to draw a Fibonacci retrace between that high and that low, we take it back to the previous significant low before that divergence started. You can see there it's pretty much already hit that minimum retrace level, which is the 23.38% level. So it's already touched that, and that little wick is actually broken into that range. So we expect it very likely to fall further, possibly come towards this previous resistance, which is now a support level. So that's, I'll just get rid of this Fibonacci to make it cleaner. So that's our retrace level. Sometimes it just bounces out of that. Other times it breaks through and drops lower. So I'll keep an eye on it and see how far it drops. But you'll notice the CCI is also still dropping on the hourly. So what I've got here is the back testing. Now what I've got up here on the top chart is the profitability chart for the stop loss strategy. So again, the strategy is if we're trading on the hourly, when the daily is broken higher, like in this period, for example, we take long trades on the hourly. Alternatively, when the daily is broken below, now this one you wouldn't have gone short because you want to see the price break below those moving averages as well. But going back to this period, when the price and the CCI break below the moving averages, then you take short entries on the hourly. So at the moment, the daily price on the CCI and the price is bullish, so which means we only take bullish trades. And at the latest trade we would have taken was this period here. You can see that there this is the 1 hour chart for both the average down approach and the stop loss approach. Now you'll notice here the average down approach is generated, if you're starting from back here, if we took it back from the start of that period there, was at the 4th of March on the daily, which is this period here. You would have taken the first couple of trades would have been pretty much equivalent for both periods, so the average down and the stop loss. But in this period here, when you opened up the trades, you would have closed out a couple of trades there, and on the stop loss, you would have been stopped out a couple of times. But on the average down, even though you had a bit of a drawdown, you eventually added to your positions in accordance with the strategy. So whenever it breaks above on the CCI and the price, you add another position as long as the price falls enough. And in this case, it did actually add more. And here it closed out. You can see there with a profitability of 26.40 versus 320 on the stop loss. But overall, since the start of that period back on the 4th of March, if you're trading those two methods, the average down approach has generated 4,400 and the stop loss approach has generated 1840 and still going as we speak. But bottom line, just wait for this divergence to play out, I suggest. I'd like to see this probably break lower than that moving average, and then wait for a new entry so long as the daily is bullish. Wait for a new long entry if that breaks higher than the CCI. Don't enter it when it's in mid-flight like it is at the moment, especially when you see a bearish divergence. You want to enter it when the price is a fresh and the CCI is a fresh breakout from those moving averages like it did back here. To support the channel, hit that like and subscribe button, and for added benefits and for a cost of a coffee each month, consider subscribing to the Patreon page where we look at weekly scans of bullish shares across various regions. Thanks for watching and see you in next week's video.